According to FinScope studies that have been taken, we come after Mauritius on the continent today in terms of financial inclusion. What does that mean? Financial inclusion means people are doing more. It's not people are saving. So the saving is about education. So if we educate them, yes, they will be coming in numbers. So of course, after that step of onboarding, more people, technology will come, or should come. But now on the structural aspects, we must create liquidity providers, market makers, because the underlying assets, if they are good, people will invest. But secondary market people need to exit. If they want to exit, how do they do that? If there's no one to provide that liquidity, there will be a problem. So I think we should promote and incentivize market makers. I think that's the small contribution I can make on that. Market makers, but onboarding more people and technology.
Paul, speaking about Uganda, I don't know whether you're encountering similar challenges as we're in Kenya when it comes to regulatory or tax incentives or government support. What is the landscape there? How are the government in terms of policy support or the regulators responding to this sector? You saw, for instance, in Morocco, they had a 5-year window for people to onboard REITs with tax incentives. Is that a similar situation going on in your country?
No, and I think really we need to look at the systemic risk, especially for us in Uganda. There are a couple of issues that need to be addressed at policy level, majorly in the sense that we've got one national pension fund, the rest are kind of restricted, so everybody has to contribute to one. So if it comes to contribution and in terms of liquidity, we find that there are about $10 billion in assets under management, about 8 are under this one fund. If you look at liquidity on the exchange, the fund in terms of the secondary market float is holding almost 80%, and it will not sell because there are no assets available for it to reinvest in, and yet it's bringing in over $30 million every month in collections. So there's a bit of policy that needs to change in terms of opening up, but also in terms of how these funds are able to invest. There are a lot of restrictions in alternative investments, in whether it's external and away from Uganda. There are quite a few opportunities within East Africa, but that is only as far as they'll be able to invest. So that ties down liquidity and also creates a lot more challenges. So whether you bring in the tax incentives or not, I think it's more about opening up the markets, creating more flexibility from a policy perspective. And usually you'll see that the policymakers are not keen on that because the key part is to protect investors. We've seen a major allocation going to government securities, so that also crowds out all other asset classes in terms of investment. Real estate is very big in Uganda. I think for me, my takeaway from this conference is that there are opportunities to unlock real estate, where we've seen a lot of properties being put up, but all this capital is tied up because not much of it is sold or comes at a very high rate and is not affordable for the day-to-day management. In terms of liquidity, I think the vice chair, is the president, vice chair, gets confusing stuff, I think has spoken to it. We need to look at the markets in a different way. We need to look at what the product has and look at regulation, as opposed to regulation tying down the opportunities in investment, especially in alternative asset classes where we've not been able to expand much into. I think when we look at the insurance sector, the recent new regulations have opened up the opportunity for the real estate investment trust. And I think there are 2 deals in the pipeline. Reason being is that they have to reduce the amount of property they are holding and have more cash. So that creates the opportunities, but again, you find that regulations that are driving it, it's not the investors or the owners of these properties who are willing to come in. But I think what REITs do is really create a new, more vibrant asset class for exchanges. I think the uptake from retail to institution would be, would be more vibrant. And I think if we do pursue this and structure it right, with the different tax incentives that are provided, we would see more uptake. And for us, it's an opportunity that we're looking at.
Thank you. Emmanuel, tell us more about the greening of REITs. You've spoken about your first REIT being green. What's the motivation behind that? And how can exchanges do more to enhance the sustainability agenda around REITs? What's really the motivation?
Thank you, Jeff. I think as exchange, and you, Jeff, you've been a CEO of the exchange, you know that we have a role to play to make our countries and also our economy to be sustainable in terms of climate and also for social to build our community. So the initiative behind Green REIT was that not only that we are going to develop a project which will support economic development, but we have to do it in a sustainable way. That the energy which is going to be utilized, it has to be sustainable. So that was the background to it. But also we are looking at our investors. You know, our investors have been to the largest extent pushing our markets to go to that direction. That not only we should focus on raising capital or facilitating income generation, but also should do it in a sustainable way. So in that conversation, really we are now aligning to bring more sustainable product, not only in terms of rate, but also we are looking for bonds which are more sustainable, and also we are, even for the companies, we are in the process of also of creating an index, an ESG index, to show which companies are compliant, and by doing that also to attract more investment to come to our market. So we are leveraging on that opportunity in recognition. That's what the investors wish for us to do. But also we are looking at our role as a policy tool of our government to ensure that it is sustainable goals. So in a way, what I can say in summary is that the exchange is playing its role as a sustainable exchange, one of the sustainable stock exchange in the world, to facilitate the global ESG goals.
Frank, tell us more about MarketStrong. So you set up the Aquatic Securities segment and have listed 2 REITs there, or 3 now, and you have the public markets. What drove that, and what's the interplay between the 2 markets going forward? Where are we going to focus on? Maybe you can discuss this.
Thanks. Look, I think there is quite a bit of lessons learned from the NSE journey so far as REITs is concerned. I think the first thing is to say we need to accept that the REITs as let me call it an asset class is truly still new in many people's minds. Therefore, the first issuers have had to also learn as we go along, and NSC has also, of course, had to learn as we go along. We are finding that until we have a fully developed REITs market, there will still be a need to have both listed and unlisted REITs. And so for us as NSC, having both a vibrant listed segment and the USP, which is our unquoted securities platform, I think does still have a need in the market. There's a gap in the market that the unlisted side fulfills, and we as an exchange want to support that. And the idea would be that as you exist in the USP, with time you'll then graduate to the main market. I think the second thing which I think Oyaki highlighted is this push and pull between NAV and market price, and the technical need to really respond to that if in fact we have to have a vibrant market. So I am simply saying I think there is real reasons to have both and for the NSE to support both USP side of things and the main market. From a forward-looking perspective, the way we're looking at this is to intervene or at least support the three elements of the value chain: the promoters of the issuers, the actual listing and trading, and of course investors, the investor side of things. On the investor side of things, the priorities are investor education, to get people to understand how these REITs work, and of course enabling liquidity to come. And I think the key takeaway for us is it's important that anyone setting up a REIT that is targeting retail investors has a way to aggregate retail investors to come into the vehicle. I think that's one of the lessons we also from the Aecon experience. On the listing or promoter side, we are working, for example, with the RAC to make sure that there are toolkits out there, REITs toolkits, but people know, find it much easier to actually bring REITs to market. And I think there's a presentation later this afternoon on the REITs toolkits, and I think that's a very intentional one. We are also exploring supporting dollar-denominated issuance, so REITs that have dollar flows, because that then also opens up the potential investors outside of our borders, including those of you who might be interested in investing in dollar-denominated instruments. And then the last bit I think that is important is what Emmanuel has said, which is investors out there are asking for instruments that have ESG features or have sustainability-linked features. So even outside of REITs, we are pushing for that on other instruments. Similarly for REITs, we want to promote that process so that instruments or other listings that are coming into our market also have those features to widen up the investor base. Over and above it, we are an exchange, so governance, transparency, investor protection, all those things still remain relevant.
Thank you very much, Frank. I think we could take one question from the audience.
Thank you. Very informative session. Just a question around the liquidity of REITs and also just the performance. We're talking about, you mentioned capacity building for retail investors, I think several of you. I'm curious whether it's the capacity building around how they work, or really it's clarity as to whether the building blocks are all quite there. When I say that in terms of the sanctity of contract, right? So when you think of our adherence to, say, zoning laws, when we talk about real estate, when we think of whether you can trust the title deed that you have, and how all those uncertainties build up to the decision-making process for an investor. What are you, I think that's a reality in many of our markets. I'd really be interested to hear what you think about that and what you do around that. Thanks.
Is that okay question? Any of you? Huh?
Sure. I'm happy to comment. Maybe the first bit is the reality check on us, which is we are not creating anything new in the sense that other developed markets have figured out how to bring REITs to market, and more importantly, have them trade with a high level of clarity. In our market in Kenya, I think it is true to say that most people understand real estate in the normal sense is in many ways illiquid. And that on our side, we are saying by coming through the REITs mechanism, you can have exposure to real estate while enjoying some element of liquidity. We haven't got to a point, at least from an NEC perspective, where we are talking about very highly liquid counters. I think we had Celestine mentioning the need for example, for liquidity providers or market makers. I think as this asset class gets more developed, it should be able to track the levels of liquidity that we would expect in other listed instruments. But I accept that where we are right now, that's still a journey. I think you will find, for example, the entities that are now, the REITs that are the NECs that are on the USP side of things, they are having, shall I say, more control on the trading, more control on the visibility on what they think is the market price, and it is easier then to have very pointed conversation with the potential investors. What I hope is that going forward, retail investors will come into the REITs asset class primarily through aggregation vehicles. And that will then give, let's say, a foundation for there to be more transparent market pricing and, of course, liquidity flowing from that. I do not think that Kenya's journey will be any different from other markets that have developed this to the levels where they are. We might have to tweak it for Kenyan circumstances, but I think the trajectory will still be similar to that. I also hope that as we get into more specialized REITs, then price discovery and the liquidity that will then flow on the back of that will also get more improved.
Thank you. So in parting, then allow Paul to speak to the sanctity of top titles and what Uganda is doing about it. So and then you can have the mic and you put parting shots.
I think for me, as a parting approach, exchanges are well positioned to impact a lot of stakeholders. We are a stakeholder-driven organization, and the key part is to impart the knowledge and bring all the stakeholders together. What we've been able to do in Uganda is, in particular asset classes, is we've got what we call the bonds, equities, and related instrument forum. We hold this forum every month, and we bring high-level experts in a particular field and discuss that particular topic. I think this is a new area we need to look into, but also as exchanges, as Christabel and Kofi spoke yesterday, when you have a live transaction, you get to understand the nitty-gritties of what needs to be done. And when you have that, you need to take advantage of promoting and bringing the engagement. When we had the telecoms coming into the market, we all had to get into the knowledge of how telecoms work and the detail. The previous telecom had been Safaricom, that was 206 at the time, where a lot of Ugandans had invested. But now you can see the knowledge around the telecommunication industry has really grown and where investments are put. But when it comes to real estate investment trust for us, I think what we're going to do is reach out to the potential issuers in the market, educate them until we get deals on the market, especially the insurance companies, and then thereafter, when we have a deal in the market, we believe the rest of the investors are able to come on board, and that we can only do working with the investment advisors within the market. Thank you.
Mine is very short. I think we need to democratize this whole process by involving retail investors. All the institutional investors who are here, they all live off retailers indirectly. So now people can come in. Everyone likes, we are in Kenya. We know when I was growing up, I was told Kenyans love land. They grab land all the time, which is okay. But now they build, they develop it. So why not involving our own small people to own a piece of that? And how to do it? It's technology and education. Thank you.
Thank you, Jeff. I have two philosophies in my life. One philosophy, and is tied to the culture of my people in Tanzania. Seeing is believing. Tanzanians are very hesitant to do something which they've not really seen it working. And luckily for our country, even the way our market was established, is that the government actually was the initial issuers of products to the market through equities. And then after that, government bonds. So the ecosystem actually developed from that the government brought companies, when it succeeds, other private companies start to come to the market. The government listed their government bonds. When it succeeds, people start to trust and invest in government bonds. We now see the corporates also issuing bonds. Now, looking at the rate, the government, through its export processing zone authority, is now exploring on issuing a green infrastructure rate. We think this now will also give some sort of education for other potential issuer to see how these instruments work in the market. So for us, I think it's a plus that the government is now working to issue a rate. Another philosophy which I usually follow in my life is baby steps. Baby steps. You have to build based on a different blocks. And here I would like to allude to the development of our collective investment schemes. The government initiated the first collective investment scheme, which is very successful. We've seen since last year up to now, private collective investment schemes start to come up. So definitely now it will be even easier when you bring a rate product, because the way it's structured is all that different from a collective investment scheme. So it will be even easier to sell the idea to investors. It will bring that they have that knowledge now, so it's easier to push them to the next step. So my philosophy is seeing is believing and baby steps.
I like that. For me, I have three points. The first one is that just because it has the name real estate in its name, real estate investment trust, does not mean that people understand how REITs work and that they will come into the REIT structure. You please do not make the assumption that everyone knows about it and they are therefore going to pile in. You have to demystify REITs and you have to go out in the market to educate the market about how REITs work and what the advantages are. I think anyone wanting to issue a REIT needs to make provision, budget, resources, etc. to demystify this to your target investors, especially retail investors. The second thing is we still have to push for incentives, policy incentives, tax incentives, regulatory incentives, because as I said, I think this is an asset class that's still new for a lot of us. For those countries that are yet to start on this journey, please consider what incentives you need as you build your frameworks, so that then this asset class can actually grow. The last one is we must ensure we do not have bad actors in this asset class. You are aware in Kenya, I will not name the company, but it left terrible bad taste in particularly retail investors in the real estate space. As a result, even up to now, you mentioned anything to do with real estate, there is skepticism, there is a huge trust deficit, it's an absolute mess. Given that we are now trying to build this new asset class, please, each of us here needs to make sure bad actors do not contaminate this asset class, so that then it has capacity and promise to grow, especially if we are going to have retail investors and the likes of pension funds, which is your money and my money. We must build this asset class with integrity. And I think that is an important thing. Sometimes I say some of the incentives we are looking for is to, like for example, reduce some of the regulatory and compliance issues. I say, no. Given the history of this asset class, of real estate generally in Kenya, we have to have this so that it becomes a mature sector, and then after that maybe we can open it up again. Thank you.